Good morning, everybody. How's everyone doing today? How's the sound? You guys hear me okay? I hope everyone had a great weekend. This is one of those weeks where there's just not a lot of news during our typical U.S. trade session, other than the usual stuff that happens at 8:30. Of course, crude oil. So Friday, there's a red label report, preliminary consumer sentiment. What else? Not much else to speak of. Some ECB talk. Again, I'll be sleeping when that happens. So far this morning, look at the Euro US real quick here. You see not a lot of range. Let's see. Yeah, nothing to get in the way of this short here that just barely triggered in. So we'll see how that plays out. If you're in that trade, let me know. That would be the first trade of the day for the U.S. session here. The short right there. So far, kind of in a consolidation after this leg down. 1214 with the stop at 1231. Get it off that round number, that 10. Should up one pip. Going to 1199, 1193, and 1187. So we'll see if it can break through or not. Definitely choppy. You can see it in there. And the British pound. This happened a little bit too soon, so flat at this point. Definitely see some trades that would have been nice had they been tradable. This one was traded during the European session right here. It could have been. Let's see what happened earlier. Maybe already finished. Well, maybe not. Let's see. This is 125. So if you're trading before 2 a.m., you maybe grab that one. Otherwise, this would have been the first trade of the session. You can see not a lot here. No range, lots of spikes. But it did find its short entry, and that found its targets. Target 1, 2, and 3. There's 15, 21, and 26 pips minus spread. So Counterpunch was able to catch the breakout, which was nice. Kind of kept everything flat up until then, which is also nice. So pretty decent session for the European session on the pound US, a one and done. And then this bridge session here, some movement. So we'll see what happens now. The US session starting, but so far there's nothing. And we have a possible short on crude here. For 30 seconds. 4487 to 4469, and decent sized trade too. A trade more than 10 ticks. It's kind of refreshing to see. Of course, we're kind of at this sideways thing going on right in here over the last hour and a half or so. Up and down. Crude is down almost over 2% actually already today. Below 45, sitting right below the $45 a barrel level. I think that's probably a pretty big key level there. So possible short, and actually it is now a valid trade. 4487 to 4469. Stops at 4506. If anyone has any questions about any of that, feel free to let me know. If you're brand new to Counterpunch, we've had some new members joining us recently. Feel free to say hello and let me know who you are. Don't be shy. Yeah, and good point. Has the volume rolled? I think you're right. Let's double check that. Yeah, so the eMinis have rolled over too, so that's pretty important. Not just the YM, Russell, ES, and Q. And by the way, that is a long to get in sync with, but now there's a new setup. So we have a long 4501. You might want to push it to 4503. Not sure it matters because when you look to your left, there's an 04. So this is basically an add-on setup to this green trade that triggered in. And the green trade is, the stop is down here, so it's still going. To get in sync trade, we always go with the newest get in sync or the newest setup. So there's purple, a purple trade. It's pretty small, whereas the green trade is pretty big. Hard to adjust on a 9-tick trade on that one. Doesn't really have the best risk-reward ratio because of the key level adjustments taking place. So yeah, that's a tough call there. I don't like that trade at all, but it is the first trade if it gets triggered in. The white trade's canceled. White trade is canceled. You can see the entries have stopped printing. $45.01 to $45.10. A 9-tick trade. I don't know if I'd want to adjust it 2 ticks. It's like 20% of it. Just like that. I mean, maybe wait for a better setup. I don't know. I'll let you guys decide there. I'm not crazy about that trade right there. Too small. Could work, but look where the stop is. All the key level adjustments have skewed the risk reward ratio because the key level adjustment on the stop has pushed it down to there, and the key level adjustment on the entry has pushed it up. It's like 4 more ticks that kind of mess with the R to R. And you're right, it is flip-flopping from up to down. You can see it. Time of day has been choppy for a while now, quite often. Greg, there's been a lot of earlier trades that have been pretty good on crude, and I wouldn't mind, given that if someone were to research it out and decided that they wanted to start earlier with crude oil. I mean, Counterpunch is pretty versatile. You know, as long as you test it out and you like your results, starting earlier is fine. Not possible for me. Being on the West Coast, I'm already getting up earlier than I want to get up. So, but you know, that doesn't mean it's not a good idea. It probably is a good idea. Yeah, and we could look at T bonds. T bonds could be very good too. A lot of options. And welcome to the room, Augustine. Uh, Hog, it doesn't change colors, but it might be that the default color is different, so you could change the color if that's what you're asking. Well, yeah, the markets don't know when the sun comes up. They don't care either. The sun is up somewhere, just not where I'm at. No, it doesn't change based on up or down, and in Thinkorswim it doesn't either. Not the signal line. Sathe, for in MT4, I don't recommend crude oil. Sorry to say, but this is a futures contract, and MT4 is not. You don't trade futures with MT4. You might have a cross. You know, like what do you ask me? Like a dollar, crude oil versus the dollar type of thing. I know some countries have that. Some brokers. We don't. At least, you know, you can only trade time-based charts. You might try a 5-minute chart. You have to really watch your risk levels. I'm not saying you can't do it, but you got to watch out for spread. There's a lot of things that, you know, you have to work through, and I'm just not familiar with it. Hog, I think you are. Yeah, Sathya. Sorry if I'm saying your name wrong. Okay, we have a possible short now on crude, so heads up there. This time 44.87. Crude looks like it's vacillating. It may try to come up and test that 200 EMA and then roll over. Maybe it's starting to roll over now. Maybe it's just going to vacillate up and down and flatten out. It's kind of hard to say. It's already down 2%. Yeah, it's pretty choppy for sure. Out of chop could come good trades. Meanwhile, the Euro US get long at 31 because of the short, right? It got short here, and so the 2 pip adjustment would be necessary on that entry, which is where the stop is on the green anyway. So you stay short, you get long at 31 with the 2 pip adjustment plus or minus key levels. So Euro US is choppy too, and you don't want to get chopped up and down, up and down, up and down. Try to protect the trade you're in while respecting the fact the market could move higher. This is a no news Monday, so it may take a little time for stuff to get going, especially in this pre-market time before the U.S. market opens. So we'll see. It's also the first, let me change these symbols here, the first session of the December contract for the eMinis. Yeah, sometimes it is, but you also have to follow your trade plan. Now there's a long, and again, these are real small trades, and it just zoomed right on up and through. There it is. It happened so fast. that if you weren't long, you would have missed it. If you grab the trade, you grab the trade. And, you know, it's the minimum size trade that we take, and it counted, and it's still going. This could turn into something. Hopefully you guys are able to grab that one. Basically, it's the same as the purple trade if you had your purple trade on, but that one technically canceled, and then the green trade came. And it went right on through. That one, like, blink, and it was too late. You had a moment to put the trade on, and then the rest. But see, Hog, there it is. I mean, you got to not confuse the current condition with what's going to happen next. And that's why we have a trade strategy in the first place. You know, there's a great quote that I read the other day. Maybe some of you have heard it, and it applies to trading. It's so appropriate. And basically, the quote is, a good hockey player goes where the puck is. A great hockey player goes where the puck is going to be. So how appropriate is that? By the great one, Wayne Gretzky. And so that trade finished, and of course the short, but it's already one and done for the day. Following the trade plan with the power of quitting, that pretty much did it right there. And if you look back, you see the 50's trying to come up to the 200, and that's usually a good time to try to get long. I mean, yeah, it could roll over, but you had the possible shorts that never triggered in. I see the 5-minute. Although I see it hitting target 1, I don't see it hitting target 2. Well, I guess it depends on what trade you're in. But you got to watch out because the risk can be pretty large. And David, yeah, that 9 o'clock could happen. I mean, that's right when it did happen, right? It just kind of blew through like a cork out of a champagne bottle. Counterpunch, you know, that trade made new equity highs for crude oil. Crude oil is inching its way higher and higher equity-wise for the trade plan. Year to date, that hits the highest point of the year. Definitely not as smooth of a line as the following year, but still. How many people went to target 2 and how many people went to target 3 on that green trade? Anyone make that decision based on the size? Just curious. T2 and trail, there you go. Yeah, it's the minimum I would consider. Well, 8 ticks would be, but some people want it to be 10, which is fine. I mean, I don't know which one's better, going for 8, going for 10. It's really hard to know. The third target was 12. That's usually what I do when I see a trade, you know, that's the middle target is 10 or less than 10. I usually go for the third target. But one and done. What are you going to do? 18 ticks on the trailer. 9 ticks on target 2. 27 ticks on 2 positions. Take what the market wants to give you. In at 9, out at 9:01 and 50 seconds. So less than 2 minutes. On Forex, there is a long setup on the pound US at 32.85. I usually only adjust the key level if it lands right on a 10. I usually don't really adjust too much on Forex. I don't really find the need, but it's kind of a style thing, mainly because of spread. I just don't want to give up anything else. The setups are pretty strong, that they go through them pretty easy. And then on the Euro US, remember there is that long setup there, but we want to adjust because of the triggering short down in here. Got to consider it's still short. So the long trade's still valid, but the short trade is what's we're trying to stay short. Although the clue might be that the high trend has been moving higher, kind of a little sideways in here, but down in here is probably a better place to get long as it's going up versus short. But you know what? When it hits that 50, that could be resistance and it could roll down. We'll just have to wait and see. You can see the blue, red, blue, red, blue, red. I mean, this is trend mode and there's not much of a trend. So at this point, just follow the setups. Right at 835, short. Adjusted entry long, hasn't gone through it yet, so you stay short. Keep it simple, don't overthink it too much. Heating oil. Right at 9. There's another earlier one at 8:30, and both of them. Look at how 8:30 hit target 2 perfectly, and look at how the one at 9 hit target 3 perfectly. Two completely different trades, both targets tuned exact to that time, that point in time when the setups were. See that a lot with counterpunch. But heating oil also one and done. So far so good. Well, Greg, you're watching a 5-minute chart for one. You could easily set a 377 tick chart on TOS if you want. Good morning, Sorum. So that's one thing you could do. But even after you do that, yeah, I was going to say, well, even after you do that, you have different data feeds. So the idea is you just have to learn how to trade your own chart, and there will be times when you'll get a winner and we won't, and vice versa. And if you test your own chart and you like the results, that's how you build your own belief and confidence so that you could trade like a business. That's what we want. In the end, this is your trading business. So you have to just make sure that you've done your preliminary foundation building, because without that, most people don't last because they don't understand the ebbs and flows, right? The 2 steps forward, 1 step back. People typically quitting at the end of the 1 step back. And sometimes you might get more than 1 step back and more than 2 steps forward. But the general guideline is you want to realize that it's going to ebb and flow. And if you haven't lived through that a bit with your practicing and your foundation building, chances are you'll quit, and quit at the wrong time. But one has to be very secure with trading one's own chart, because that's all you have. You don't have my chart. You have your chart, right? Now, I don't know. I believe Thinkorswim has some pretty cool backtesting tools. I'm not familiar with how they work, but the backtesting is critical for your own belief. Sorum, you could find it under trade plans. Should be there. I think last time I looked it was there. But you know, if you want to do what we're doing in the room, all we're doing is one trade, one or done. We're doing standard mode. I'm showing the trend mode indicator, but it's standard mode that we're trading it. And one trade, win or lose. That's just one variation of how you could trade it, of course, but it's been pretty successful for a while. Soybeans last week actually didn't do as well as hoped. The one and done actually ended negative, whereas a few more trades probably would have changed it because there were a few good trades that followed. So yeah, soybeans last week did not end as well as we would have liked. Shortened week. So basically, Wednesday, Thursday, and Friday all ended negative on soybeans. Morning, Kia. Good morning to you, Andy from Germany. Sorum, I'll just, if you want to look really quickly here, I could open up this calculator and kind of walk you through it. There's nothing different until, let's see, what do I got here? I use a 6 tick minimum for break even and for trailing. So basically a 1.5. And is that the right number? I don't know. I mean, you can leave it at 10. That's one of those things that you just have to kind of experience for a while. Not sure, you know, that could be too tight on small trades. It could be, you know, maybe 10 is a little too loose. I'm just not sure yet. But those are like two changes that I've got on my calculator. And then one other one is key level set to false. And that's it. There's not much more that I think you need to do. Trend mode, false. Unless you want to trade in trend mode, and you could look at both. Like I said, I've got it playing on the chart, but it's mostly for educational purposes, just to kind of watch it and learn from it. No other reason. So that's it. Start at 8:30, one trade, win or lose. You can trade multiple positions, exit at target 1, target 2, target 3. A target 1 winner, doesn't matter. I mean, it's one trade. And that's one plan. I mean, doesn't mean you have to do it that way. You could back test it and check it out and see how it looks if you were to do 3 trades a day total, for example. Pound US getting long here, heads up, Forex traders, 32.85, targeting 32.98, 33.03, and 33.08. Remember, the way I think you should trade these is you take 25% off at each target. And I'm using two calculators on these day trade charts. If you're new to Counterpunch, you might not be aware of that. I use one calculator just to mark the 1x level so I know when the trailing starts, because it's got to go to the 1x plus 12 pips, right? So you see that little pin, that pin prick dot right there, that's 1x. That's not a profit point, but that's where the trailer begins. To start cutting risk and locking in profit. As you can see on this example, which one is it? The gray trade. You got the gray trade, you could see it, and then you've got the filter comes off and the gray trade becomes valid again. So if you look at that gray trade, you can see where the money management at level is. So when it triggers in and hits that level, you can see the stop starting to trail up. The little trick I do with two calculators, basically the same settings, except that you set all your targets to 1x and your trailer set to 1x, and then you can change the style to a little pinprick so it doesn't clutter your chart. You don't get confused by it. But that's how you know when to start trailing. So it's great. Excuse me. Anyway, so there you go. And if I scrunch this down, you can see where that money management trailer level starts right there, right before the first target in this case. Because the first target is 13 pips. And target 1, or the 1x would be down in here. So remember, it wants 1x and 12 pips. So push that trailer up dynamic, as you know. That's how that works. Well, I mean, we're in between stuff right now, Hog. So, I mean, I don't mind showing you whatever your question is. You wouldn't be interrupting. We could do it later, too. Either way. We've got a few minutes. I think that it's an option that you might want to try trading earlier. You know, you got to maybe do some fast testing on that, Greg, get a start time. And if you want to start earlier, for example, that could be an option. I've seen it trade, you know, nicely, maybe an hour before we typically start. Start looking at the 7 or 7:30 hour, maybe, is an idea, and then fast test it. And look to, you know, you want to get your one good winner and quit like anything else, because it's all about leveraging and compounding, right? Being able to bank those profits steadily. Yeah, anytime, Hog, just let me know. Wow, lucky you, Andy. I'm jealous. Yeah, I doubt you want to get up at 3 a.m. on vacation in Hawaii. I wouldn't want to do that either. Yeah, Greg, I've noticed that myself. So, I mean, a real simple fast test. You know how to fast test, right? Yeah, so I think that'll give you at least a preliminary answer as to whether it's worth investigating further. But if I had to choose a market to trade kind of in that awkward time, what we call the bridge session in Forex, then gold might be a good choice. And there are going to be times when it does really well. There'll be times when it doesn't. That's why the fast test is important, so that you can see it. You know, you want to be able to see it and see all the good, the bad, the ugly, and make sure that there's a lot more good. And then if there is, then you want to get it to that UTA and really flush it out. And I think I would maybe start with I mean, my guts say trend mode, but you might want to do standard mode and put on the trend mode indicator and kind of keep track of both and see how many times it makes a difference and whether that helps or hurts. And that's the beauty of the fast test, is you can really see it quickly. You know, just wins and losses in 2 columns. You're looking for sessions. Yeah, I mean, we could take a quick look. I think I have a gold chart. So here's gold, a 377 tick, the December contract. Just looking backwards. So that's 5:30 this morning. Is this trend mode? I have a feeling it might be trend mode. Let's look. Yeah, so this is trend mode. Let me turn trend mode off. Whether you want it on or off, I'm not too sure, but you could see, you know, you could try them both. Fast testing is fast, so it's not that hard, but, you know, 5:30, nice trade. It's just today, of course, it's random. 6:50, nice trade. That's at 7:50. It's pretty slow, right? From here to here is a whole hour. So that's one thing to think about. And that one just missed its target 1, stopping at the 200 moving average, but then getting short. And, you know, not even if you did get long here, it's a, you know, the loss is very minimal because of the stop and reverse to a nice winning trade. And then this one also a good winner. And then now choppy. So somewhere in this pre-market time frame, you might want to look and isolate that time zone and just fast test it. Look at trend mode on and off. If trend mode was on, then you wouldn't have let's see, let's just turn it on and see the difference. So you would have missed this gray trade, even with the chaser. This gray trade you don't get, but you get the green one instead, right at 8:20, right? This purple trade didn't change. So you filter out some stuff. Oh, you might have got that green trade, and again, that one just missed target 1, 1332.6, getting to 13. Well, you miss it by more than 1 tick. You miss it by 3 ticks. So, and then you don't really stop and reverse over here, down here. So maybe today's session, you could see trend mode probably didn't do as well as standard mode. One idea is to use trend mode just to prevent stop and reverses, but don't let it keep you out of white trades. Because a white trade, if you think about it, is not a trending trade. It's a counter trend trade. So oftentimes you miss those great trades when you're in trend mode. And that's kind of what happened in this case. That was a perfect trade, as you can see. Target 3, 1332.4, got as high as 1332.4. Yeah, so it missed target 1 on the green trade by 2 ticks. So if you understand trend mode and understand how it works, you could do like a hybrid idea where you just use trend mode sometimes. That takes a little bit more advanced understanding of the strategy. And as far as the chop doing a good job, I mean, it's, you know, staying out of the fray here in trend mode. If you're in standard mode, you know, you end up getting in long here, now short here. So standard mode, maybe not handling this choppy area as well. Of course, if this heads down and hits targets, then that'd be pretty good actually. But have to wait and see. Just a few trades. You can't really draw any conclusions either way. So a lot of people in here today, and I assume, let me just say good morning again to anyone that's joining us late. Feel free to say hello, introduce yourself. If you're new to Counterpunch, love to hear who you are, what you're trading. Just interact with us. Always good. Crude oil finishing with one trade today. Heating oil, one trade. The DAX Futures, one trade. All one and done. Forex, you can see, kind of going nowhere fast. The pound US did get into a long trade here using this 5-minute chart in trend mode. So we'll see what happens. Was one and done during the European session. Nice little winner during what we call the bridge session. Not really trading during then, but you could test it and see if you like that session. But the US session, 8:30 start time. And there's your first trade of the day. So we'll see how that works out. On the Euro US, there was a short here, and you can see not a lot going on in that market either. Getting short, and then with a 2-pip adjustment for the long trade, along with the key level off of the 30. So that would go up to 31 with the stop on the short, both basically at the same location. Staying short so far. Okay, so well, it looks like it got long. You have to make that adjustment. It keeps you short here. So we don't know how that will turn out yet. We'll see. Yep. Very good, Jason. Good morning to you, John. Good to see you again. So Jason, my recommendation for all new people actually is just keep a notebook handy, and if you see something you don't understand, write it down. Keep track of your questions. Just stay very organized with that, and we can make sure to get them all answered up, and that'll just help shorten the learning curve. Do things the same way every time, every day. Run it like a business. We know we're not going to win every trade, but we win most of them as long as we can continue to grow our equity. That's all that we're really trying to accomplish with minimal trading. Kind of the theme that we always adhere to. Yep, I expect you would. That's fine. So heads up, because we're getting close to the market opening here. Got another few seconds. So I've got an 8-tick range bar on the Russell showing here. We wait for a new trade. We're not getting in sync with the pre-market trade. And on the YM, say flat at this point. This short trade is using what we call the squeeze filter when the 50 is pushing up on the 200 from below. It's not really the intention of the filter though. It's supposed to kind of prevent it when the 50 is pushing up and getting close to that apex. That's one of those trades that I think you might make an exception to. If you're going to take it, you would adjust it below or just wait for new setup. Let the filter be what it is. It's one of those filters, when you understand what it's supposed to do, you'll see it pop up sometimes in a way that never was originally intended. Maybe it still helps, Here's another trade that's filtered out because trend mode is red, and so no long trade. So we just got to keep an eye on the YM here. And the Russell has a long. First day with the new contract. Well, I guess Friday, technically would have been the first day. Could have switched on Friday. But first Monday. And no news. So unfortunately, the pound US stopped out and now getting short. But the Euro US pushing lower. So let's see if that one can break to new lows. There's a long now on the YM, 17,933, going to the middle target 958, and the stop is at 909. Crude oil continues to trade well. Hog, you see that? Looked choppy, and then as soon as we started trading, winner, 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 winner. That's the whole point. That's why we have a trade strategy. I mean, you could guess and think and talk and feel uncomfortable and this and that. That's pretty normal. By the way, we got a long on soybeans as well, 77.5. Oh my. The long on the YM is canceled. You now have a short on the Russell. The long's canceled. That short on the pound US, by the way, 32.71. See the target there, 32.45 is your middle target, and 32.91 would be your stop. And the YM getting long, heads up. 17,937 to 17,964. And the Russell with a long possibility, 1209.1 to 1211.5. Yeah, the 377's a good one. Still is a good one. Lots of charts work with this strategy. Hey, the YM hitting its money management level. Make sure you've moved your stop up. 17,938. It's pushing up on target 2. You should be in a risk-free position on the YM at this point. Some traders will even take some of their position off at target 1. John, was that in the September contract or the December contract? I didn't look at the 377 on Friday. On both? Yeah, okay, good. It was one and done on the 8-tick range bar as well. Not that big, though. That buyer's coming into the market for sure. Heads up on the YM. Trying to get to 64, getting as high as 62. So missing target 2 by 2 ticks, inside of 90% of the way. Don't let that trade head south on you. Now missing by 1 tick. That's power quitting right there. So get the most out of that trade. Don't fight over 1 tick, depending on your position. Hopefully it keeps going. The stop has moved at 42. And the Russell, money management, and target 2. So the Russell, remember you're in the purple trade, and that one is one and done. And there's your full target on the YM, one and done as well. One and done meaning the first trade of the trade plan hitting its goals. It's not that we only take one trade, win or lose, like on soybeans. In this case, it just so happens that the first trade hit all the goals, making it one and done. Okay, there's some confusion sometimes when I use that terminology. Okay, the stop on the YM is at 17,949. You can see that crude oil has been magnificent since we started. Some really great trades on that one. Target 3 on the Russell. You know, Forex doing its typical, you know, watching paint dry type of action. It'll give you a trade. I mean, it'll move at some point. This Euro US could still work out. See if we could break through support here. Uh, 17,959, the stop on the YM, and the stop on the Russell. You can start just using the green stop now. It's starting to trail correctly, but it's going to move up. It's going to move up to 1210.8. You can move it now during the Russell, 1210.8. See how the stop and reverse adjustment kind of saved this entire situation so far on the Euro US? That's the concept. Don't forget that. Protect the trade you're in while respecting the fact that the market could be turning. And we try to do that with little adjustments. And the YM just finished at 63. That'll make a new equity high for the year on the YM. Brand new profit levels for the year and for the life of the trade plan, for both. So running over 2 years, life of plan equity high, and for the year equity high. And for YM traders who had to grind it out earlier in the year, especially those first 4 months, getting some payback, because since May, it's done nothing but go up, 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 up. Not in a straight line. Still that 2-step forward, 1 step back, but I mean, there was a holy grail in trading. That's what it would be, in my opinion. That's why we say that 2 steps forward, 1 step back. It's just normal. You can build a whole business with that. That's the whole idea. Nine, 4. Getting this updated. 6, 3. All right. Now we need soybeans to join the fun. Good job, David. Gibbs, yep, definitely on December. You can see it says YMZ16. Z is December. Today's a good example on why it's important to not try to second guess too much what to expect from the markets on any day. You never know. If you don't have belief in your trade plan, then you won't have the confidence to just take the next trade in the plan, and then you're not going to get the results that the trade plan gives you. And then why are you trading in the first place? It all boils down to, what are you doing? So, you want to be very honest with yourself, and it's okay if you don't have the confidence. It's okay if you don't have the belief. Some people are just not, you're not there yet. That's fine. Let's be honest about it. But then let's also do the work necessary to establish that level of belief. It's all about the foundation building so that you can get to the point where you're bought into a trade plan, you believe in it, giving yourself that big point of view. You can see where it's been, what it's done, the good, the bad, the ugly, and the equity curve keeps growing. In the end, that's what it takes to make money. And if you don't do that work for yourself, you're always going to be doubting, wondering, guessing, and like everyone else, probably on the wrong side of that equation. That's the whole point. That's why you have a strategy like this in the first place. So it's important to get to that level of understanding where your foundation is so strong that you don't care about the outcome of the trade. All you care about is executing the trade plan because you know it will work. Given enough trades, enough time, the proper risk, the proper discipline, the proper execution. And that's the difference between succeeding and not succeeding. Not whether a trade wins or loses. Trade loses, you're like, oh, I'm so glad I talked myself out of that one. Unfortunately, that's like the most harmful thing that could happen because it just creates this bad habit, and the belief that you're supposed to have in the trade plan is out the window. It's gone. And so you're left on this slippery slope. Yeah, you save money, you didn't have a losing trade, but you're not going to get the winners either. In the end, you cannot divorce the winners from the losers. No one can. That's why we always focus on the longer term edge, that psychological advantage, not psychological, statistical, sorry, wrong word. The edge that the strategy gives you and the trade plan gives you. You have to be adequately capitalized for the charts you choose, of course, but the way to get that is to follow the steps to success guide in the Owners Club, step by step. It's not some, intangible, subjective approach. It's very objective, step by step, tangible. Just gotta do it. You do it long enough until you transform and become the operator of your trade business. It happens. It just happens. You know when it happens. Just updating the trade log here. So I started tracking the 8-tick range bar. This is not a momentum bar. Now, if you're a ninja trader, you might want to try an 8-tick momentum bar, which is the type of range bar you guys have, and see how it does. This is a range bar, a little different than the momentum bar. This is when the range is met, the next bar prints, whereas with the momentum bar, the range has to be exceeded by 1 tick, and then the next bar prints. A little bit different. I think I accidentally started looking at this and liked it and just never changed it. Let's go back and see what's up with soybeans here. So soybeans got into this long trade right there, and it's still long. It just hasn't gone far enough, hasn't hit a target. It's a good-sized trade. It's not in trend mode. Let me just double check and make sure. False. We're showing the trend mode indicator, but we're trading it in standard mode, okay? You may decide you want to go to trend mode. That's fine. It needs to push up a little higher. Hopefully it will. Might be running out of steam, but maybe not. We'll see. That's the only one that's still going, really, other than the Forex charts. So just to give you an idea, like I said, I'm sorry I'm jumping around from topic to topic, but I was talking about the Russell ATIC range bar, and I just started tracking it. This is what I hope everyone is doing. If you're not, then you need to get yourself the UTA spreadsheet. This is the way you really figure stuff out. And if I go to the first trade, you'll see I just started this on July 29th. So it's pretty new, although we've been watching it in the trade room for a lot longer. And after liking what I saw, I finally said, well, okay, I'm going to start tracking this instead of the 377, which kind of has already proven itself. I felt after, almost 2 years worth of data in that one, I didn't need to keep doing it. So I started something new. And, as soon as I started, Murphy's Law, boom, terrible. Now remember, I'm doing 4 positions. Not that I'm trading 4 positions, but I'm tracking 4 positions. Target 1, target 2, target 3, and trail, because then I can get information as to how those exits work. Because sometimes target 3 or some of these other targets will stop out with the trailer and only give you partial, profit, not full results. So how they average out is important. So I track them all so I could learn that. And if you don't know the strategy and you start trading and your very second or third day, or maybe your first day is nothing but losers, you think you're going to show up tomorrow? Probably going to quit like most people. And that's why it's important you follow the success guide. But when you build a win-loss column, remember, these are just trees in the forest. We want to live above the trees. It's another bad day. Some bad days. But look, you don't see the forest when you're in the trees, right? A lot of green there also. But you don't really perceive the forest until you step back and actually look at it. That's the forest, guys. Now, when you see an equity curve, look, you can see it was pretty rough here at the beginning. But when you see this occur, granted, it's not enough trades yet. It's only a month and a half. But when you see that, you have to ask yourself the question, can you trade through the ups and downs of that 2-step forward, 1 step back? And can you get through these? I go 5 trades total. I just try to treat it the same way as all of them. Soybeans is the exception, the one and done exception. But, maybe you hit the goals on the first trade. Okay, you're done. Remember, the goals are either 2 target 1 winners or 1 target 2 winner, all within 5 trades, or you're done. Worst case scenario, they all lose. This is a day where all trades lost. I only have 3 in here, and I think the reason behind that is, I forget, I made a note, but if there's an extreme day like FOMC or Beige Book or something that typically leads to crappy sessions, maybe you limit your trades to less than 5, okay? So that's a little thing you can work into your trade plan too, Some things we've learned over the years. Don't want to fight City Hall. So anyway, the point is that if you don't build a trade log like this, you're not going to really have the answers that you need to make trade decisions that matter. You're really handicapping yourself. You want to do the preliminary work, right? If you're the CEO of your trading business, do what CEOs do. Provide leadership. You have to have the information to be able to do that. In this case, you're providing leadership to yourself. But meanwhile, look at soybeans did pop up and hit its target 1. This will be a 1 and done winning session as well. And pushing up on target 2 here, hopefully. So soybeans working out nicely today as well. Pound US looking like after some earlier winners is kind of hit the skids in here. Still short. We'll see if it could survive. Got long, that was a loser. Now short. This is one of those things where it might take a couple setups before it gets going, if it gets going. Not a lot of range in the market today on that one. Same with the Euro US. It looked like it wanted to head lower here and just wasn't able to break through yet. This is a good time to ask questions. If you're new, don't be shy. Yeah, if you have tech issues, unfortunately that happens sometimes. And that will certainly be a frustrating thing when it does happen. You just got to make sure that you fix it so that it doesn't continue to happen. And the pound US is stopping out. So, as great as the futures all did today, Forex is a little bit more problematic. Doesn't mean it's over. It's still, you're still in your trade window, and it only takes one good trade to kind of make it right, and that could still happen. Of course, being in trend mode, there's a long trade there. You're going to have to wait on that. If that's still available when this bar closes, you could take it at 91. Okay, so one thing about trend mode is every now and then it's a half step behind. You get a little bit out of sync. It could happen, especially when the market's kind of flipping around with no range. You don't really have a trend. So trend mode will miss some of those early setups, but you just stay with it. Just stay with it. Nothing's perfect. So Euro US still in the first trade, and that's still short. So anything could happen with that. The pound US, couple losing trades after winning pre-market and winning European session. No, Gibbs, and I wouldn't want to. Remember, you got to deal with spread. You need trades that give you enough target potential. You don't want to just nickel and dime yourself into oblivion with Forex. Bill Miller, oops, that's not. Everything is really trading nicely. Long chart. Do you have trade tracking on or off? You might have trade tracking off. Is your stop going across? No, you don't have it on, or no, you. Yeah, so look at trade tracking and probably got to set it to true. Or track trades, whatever. I'm not seeing any trailing stops in NinjaTrader or Thinkorswim, and with my CPT, could it be a configuration? Well, first of all, Thinkorswim does not track trades. It's very limited as to what we can do with that platform. By the way, soybeans did just stop out 979,500. So done with that. As far as NinjaTrader, you have to look at your calculator. If you open it up, you will see the ability to turn stuff on and off. And I don't know what default workspace you're using, but there's this one here at I-34, track trades. And so that would be the same input on Ninja as well. Just make sure it's set to true. Now, I did set up some basic defaults. Hopefully you read my explanations as to why. If you're brand new to Counterpunch, you might only be seeing green trades. You might only be seeing fewer trades. You don't even see the exhaustion dots. That's on purpose because I want you to start recognizing what you're not seeing and deciding what you want to see or not want to see, because what happens when people first start with Counterpunch is they'll see a chart like this with a lot of dots and a lot of lines and like, oh my God, it's so confusing. So I don't want to confuse people. So I reduced it down. I kind of deconstructed stuff, but that's just default settings. You could easily turn things on step by step. And I just think like this, you'll learn better how everything works. Okay? So if you're wondering, I'm actually surprised no one's asked me about that yet. Or maybe my explanation was really good on the Owners Club. I don't know. But hopefully you guys understand. I want you to see things little by little and then let you make the decision when you want to enable additional tools and capabilities just by flipping the switch in the calculator. That was the whole idea behind that. Hopefully you all see the sense in that, because a lot of times it's like just too much information. So the purple trade on the pound US became valid once the price was way up here. So this is what I mean by sometimes trend mode, you'll be half a step behind what's actually happening because there's no trend. But once that trend is established, sometimes you can get a pullback. It hasn't happened yet, and it's getting close to money management. In fact, it just hit money management. So the pound US, this is just one of those missed opportunity sessions. Maybe. It's not over yet. Might not be too late. But that happens sometimes. It's just one of those things. That's why when you do a fast test, when you're testing winning and losing sessions and counting those wins and winning and losing sessions, depending on how this session ends up, it may end up going in the loss column today. Still too early to tell. You still got to wait for a trade. And the Euro US, you never know. I mean, it wasn't able to get lower. And the same thing happening here. Trend mode turning up after the setup. So you have to wait. And whether you can catch it or not, we'll have to see. But that's what happens when you're not trending. So remember, the stop's at 31. Hasn't got there yet. It's still short. But it may flip to long. Well, that's for Forex? Are you talking about, Hog? Okay, because it sounds to me like you have a Forex configuration on your YM chart. Yeah, so definitely want it to be 2. And then the stop 2. Yeah, but then make sure all your other ones also ignore small setups. You don't want it to be 100. You want it to be 10, right? And on your minimum ticks for break-even stop, you want it to be 10. On your minimum ticks for trailer, you want it to be 10. So you've got a Forex default calculator on your YM chart. So anywhere that it says ticks, an extra 0 has been added because it's 10 ticks to a pip with that 5-digit broker. Okay, so you got to double check everything. Make sure where it says ticks that you don't have that extra 0 on all those inputs like those ones you just pointed out. Yeah, that's okay. It's easy to change. No, John, the default on CPX, that's a different indicator, so it wouldn't make a difference. So Bill, if your track trades are true, and for some reason you only see one, what time? When is your? That's kind of weird. When is your setup time? Does it look like mine? 8:30 and 07 seconds. Okay. So you have one plus sign here, but you don't have one here, you don't have one here, you don't have the stops tracking across. And when you open up your calculator, what about max bars for setup? Is that 4? Okay, that's 4. Trade cancel bars 2. That wouldn't have made a difference. And when you come down, you got I got, like I said earlier, my minimum tick settings to 6 and 6, but that wouldn't make a difference there. It should be track trades true. What else might it be? That's really weird. I mean, the only way I can kind of duplicate what you've got is if I go track trades false, and then it looks like this. Is that what yours looks like? I mean, there's a logical explanation, but I'm not exactly sure what it is. So notice that that's what kind of CPX looks like, right? When you then put the track trades on, it changes the look and feel. Plus, it's showing add-ons. Okay, so that's weird. I think I put track trades on. Why didn't it start to track trades? Oh no, I didn't. Plethora of trades being tracked. What you could do is go to your setup start time, just type in 8:30, and that turns off your plethora. I mean, these are all trades from Friday. There hasn't been a lot of action in the pre-market. But when I set my start time, it resets today's trackable trades. You see, it doesn't look at anything that happened prior, and it resets. So try that. Try setting it to 8:30 and see if that helps. But I don't know what's going on. So what's probably happening, and I don't know why, is that there's an earlier trade being tracked, and then this particular trade here is an add-on trade of sorts, as far as how the calculator is reading your, sequence. But if you go to that set start time and set it to 8:30, that would hopefully turn everything off prior from today anyway, and give you a trade that now looks like that. And you're not in trend mode, right? You're in standard mode. So the pound US now with a setup. So let's see if the trend continues. But there it is. That's the third trade of the day. 3-3-12. And it's a big trade. So if the trend continues and you could hit some targets here, that would definitely make up for the two losses. On the other hand, it falls back down. Well, it is what it is. This is the next trade. Make sure you get your risk set properly. You don't want to over leverage. Stick to that 2%. Are you using an older calculator, Bill? I would recommend going online and downloading the newest. Yeah, but then you don't get some of the new enhancements and stuff. So if you're using an old calculator and I'm using a new calculator, that could explain why things aren't matching up. You definitely want to always have the newest stuff. So old guy aside, I always tell people I'm an old guy. So that's a relative term. Get the new stuff and then we'll compare notes. All right, so as far as the Euro US, you have a chase possibility where you could chase this long trade if it pulls back, and that would be long at 12.29, right? The original entry is at 12.27, but it was filtered out due to trend mode. So you got to grab it on a pullback, or it's just going to be, you have to wait for the next setup. It is what it is. The pound US, we already went through that. You missed that initial burst there, which did hit target one, but trend mode, one bar too early. It's just a little out of sync, but it ends up getting in sync rather quickly. So there's the setup there, and if that one works out, you're in a good shape. Who knows how long that will take? And the yeah, that's crude oil. So yeah, still waiting for a pullback. So that's it. I mean, there's nothing more to do except grind out your forex position trades, and everything else is pretty much done. So any questions? This is the time to ask. We're going to wrap things up. Brian, the only updates that there would be if for whatever reason the platform Ninja or TradeStation, whatever, when they make some changes, our programmer might update some things to keep it current. So that could happen. But as far as improvements or new things added, no, there won't be anything new. There's already so much. And by the way, trend jumper questions are not off limits in here. So if anyone does have any trend jumper questions, let me invite you to feel free to ask away at those as well. As I realize the trend jumper room did just close, but I can answer any trend jumper questions, and I'm willing to, so don't feel like you're left all alone. Wasn't the intention. That's why you were invited into the counterpunch room anyway. So feel free to ask any questions regarding trend jumper, or if you're just starting with counterpunch, questions are good. Other than that, we're wrapping things up, so I'll give you guys a moment to collect your thoughts here. Yeah, good job, Bill. Get the current calculator. Excellent. Yeah, I mean, well, we all saw it happen. I expect this should be a pretty exciting time of year. Usually this time of year up to the end, it won't be smooth sailing every day, but there's going to be some really good volatility if history repeats itself. It's usually a good time. From May on, usually May on. Even in the summer when it's kind of slow, you can see a lot of good trading. Quick look at the YM, since I know a lot of you are trading that one, just to kind of give you the big forest from the trees thing. There was some clear cutting going on. This is usually the first 4 months. Looked like it was going to take off, and then it came right back down. It even got negative here at the beginning of the year. But since then, look what it's done. Yeah, there's been some clear cutting. Those are your one step backs. Just to give you the big picture, right? This could happen. You could get drawdown. It's going to occur. There's no way to avoid it unless you're just got some sixth sense. Most people don't. That sixth sense is usually what hurts people anyway, because you talk yourself out of the winning trades as well. It's a matter of perseverance and, again, doing the foundational work so that you can see the good, the bad, the ugly, and hopefully the equity despite it all. Despite it all. That's the thing that's necessary. You have to get to that point where you could believe in what you're doing enough, and then small risk as a ratio to your capital. And then just let, Einstein's eighth wonder of the world do its magic, the power of compounding. Because at some point you go to another contract. At some point you go to a third. At some point you go to a fourth. Even if you have to peel it back off to 2 again, that you'll get back to 4 and up to 5. You may peel it back down to 3, and then you get back to 5, and you're up to 6. Eventually you're going to get to 10 or more, and you're going to hit that point where you're comfortable with your nice position size, small risk, and you're hitting your financial goals. And then if you pepper in 1 or 2 or 3 different trade plans, and you do that minimalist, less is more idea, the way we're doing, then you got some diversification as well. Smooth your equity curve out. It's got to practice and make sure you can execute, and that you've got the belief in place to take the trade according to the plan that grows that equity in the first place. That's it. I mean, I don't know how to make it any simpler. I'm not saying it is simple, but I don't know how it gets any simpler. All right, guys, last call for questions. Otherwise, I'll be looking forward to seeing you guys on Wednesday. Keep that log of questions. Yeah, sure, John H. Money management. So typically, and that's a very important thing, you should be thinking about it, because that, you can have a great strategy, and if you don't manage your money properly, you still lose. If you're, you have to be a great trader, right? Or at least a good trader. because a lousy trader will destroy themselves even with a good strategy. Lousy traders put on too much risk. That becomes gambling. So there's a big concept that you want to always keep in mind, that you're trying to make calculated risks based on a statistical advantage. The odds are on your side. That doesn't mean you're guaranteed that this trade is going to win. And you've seen 3, 4, 5 losers in a row. It happens once in a while. That's just trading. Doesn't happen often. That's because it's a good strategy. So if you put on too much risk, 3, 4, 5 losses in a row, it's going to hurt you. Hopefully it doesn't wipe you out, but it could hurt you to the point psychologically where you just can't take another trade. It hurts too much. It's usually what happens at the end of one step back. And so you have to find that risk level that you're comfortable with. And it's part of what it takes to remove yourself psychologically from the outcome of any given trade or series of trades, right? You have to pay attention to how you feel, because that's your indicator. It tells you where you're at with your trading. If you're uncomfortable, then you're probably putting on too much risk. Okay, so that's some general ideas first, John. That's a very important indicator, is just the guy staring back at you at the mirror. Okay, you're talking about hitting money management on the chart. All right, I thought you were talking about how much risk to put on a trade. So let me just finish for the benefit of everyone else. Try to keep it at around 2% after you've done your testing, right? Doesn't have to be perfect. It's going to go up and down a little because the trades fluctuate. But you can get some information off the UTA where the average risk is presented by your trades and your trade log. You know what the average risk is, and base your 2% on that average risk. So that's where you can go. Now, if you're a little more aggressive and your strategy is winning a little more often, you can maybe go up to 2.5%, even 3%. So it's a general guideline. Some traders go as high as 5%. It's very aggressive. All right. Now, as far as money management goes, there's a general thing that we do, and it's not the same on every chart. It just depends. So, John, maybe you can give me an idea of what market you want me to discuss. But the target one is typically with futures, where we're going to start looking. Okay, the euro yen. All right, so that's different. Okay, so that's a little bit. That's actually a lot different the way I like to do it. Let me open up a chart. For futures, it's target 1 plus 10 ticks. Now, if it's a quarter point tick like soybeans, I don't need 10 ticks. I need target 1 plus, it has to be 6 ticks, one or the other, or target 1, and it has to go 6 ticks, okay? I might change that, but that's what I'm using. So with Forex, it's basically the same. If you're doing the euro yen, by the way, John, hopefully you've done your fast testing, right? And what chart are you using? So it's Forex. You're using a 5-minute chart. You're talking about day trading. Have you done your fast testing? These are all important questions. So all I did was I copy and pasted the Euro US chart, and I'm changing the symbol, and we'll talk about it. All right, good. And I'm sure it probably ended up nice, right? Because I know when I fast tested the Euro Yen, that was one of those, yeah, that looks good charts. Even during other sessions, not the U. I mean, it looked good during the Asian session, looked good during. I agree with you. All right, so the way I would do this, first of all, I've got 2 calculators on my chart. And one of the calculators is just for money management, and it's a preliminary money management. It's not to move the stop to break even. It's to move the stop around the signal line. Okay, so it might cut risk sometimes before it gets to break even. It might trail up and actually add more sometimes. So the way I do it, first of all, the main calculator, you see how I got 2 calcs? They're both running. And one of them I've labeled trail marker, and the other one is the CP Forex day trade. Let's look at that one first. So you could put 2 calculators on your chart if you want. Just label it. Remember, I copy and pasted from the Euro US. You should know what this is, trend mode, and I put my targets out a half step further, right? You know this, right? 1.5, 2, and 2.5. I'm not sure if you did that with your fast testing. I'm thinking you probably did. Hopefully you did. Okay, so it's ignoring any small setup that's less than 10 pips to target 3. Because I don't want to target. Great, so you're right on track with what I think is the best approach. So remember, we don't want any target that's less than 10 pips. If we do, we just ignore it and go to the next target, right? So if you're taking off 25% at each target level, if target 1 was only 8 pips, you wouldn't take that off, right? You take that position off at the next target, whatever is 10 pips or greater. Because once you pay spread, you're only going to get 7 or 8 pips on the trade. I think that's the absolute minimum you're going to want to accept, especially with targets a half step higher, right? So that's why if you ignore setups where target 3 is less than 10 pips, you won't have to worry about any of those. Just they don't even show up. All right. As far as money management goes on this one, it has to hit target 1 and it has to go 12 pips in order to move your stop to break even. And then it locks in 1 pip. Now that 1 pip lock-in is not accounting for spread. If you want to account for spread, you're going to have to work around it a bit if you're going long or short and make that decision. So that you know that's part of clicking through your charts and working through your back testing. But the calculator will lock in 1 pip. So if there's 2 pips in spread, you still might end up with a 1 pip loss, right? Something to consider. But it has to go to target 1 and go 12 pips. For first trade? Well, I don't know what you mean by first trade. We're not really including add-on positions. It's for the whole trade. Target 1 would have exited, and then you've got target 2, the rest of your position. Is that what you mean by the first trade only? You mean the rest of your position? Well, the first position would have hit target 1, right? So that exits for a profit. The rest of your position is protected with a 1 pip lock-in. If it comes down and hits it, you're out. If you want to account for spread, depending on the size of the trade, right? Maybe you go up 3 pips or something. This is stuff you learn as you're clicking through your charts and working in the UTA spreadsheet, because you'll see it. You'll see it with your own eyes, and you'll have to think through it. Right? This is what I mean by flushing out your trade plan. But the calculator is set to lock in 1 pip. But that's a winning trade. If you made 12 pips with your 25% of your position, and then you stop the rest out, even if you pay 1 or 2 pips in spread, or 2 or 3 pips even, you're still going to end with a positive result. It might only be a peanut butter sandwich sometimes, but hey, that's taking what the market wants to give, and a lot of times it'll hold and move up and hit target 2 and target 3, etc. So again, you got to flush it out. All right, but same with trailing. But remember, this is just the first calculator. There's another thing going on. That's when we look at the second calculator. The second calculator's got one purpose and one purpose only, and that's to mark where 1x is. Because you only have 3 targets, 1.5x, 2x, 2.5x. But you need a marker where 1x is, because we've got this set up, both calculators, to right here, begin trail x multiplier is set to 1. So that's your preliminary money management setting, because you're going to 1.5x for target 1, but if it gets to 1x, you start trailing, and that will start cutting risk. Okay? All right, so John says, so first position hits 12 pips, and I set the other 2 positions with 1 pip profit stop. Well, it has to hit target 1 and go 12 pips. if you hit target 1 and it's only 10 pips, you have to make a decision what to do. Remember, the reason why is because the reason why I say 12 pips, John, is because that is 10 pips plus 2 pips of spread. So I'm trying to account for the spread. You see? The 12 just didn't come out of thin air. It was really the 10 plus 2 pips. See what I'm saying? So maybe you want to set it to 10 pips instead of 12 pips. You know, you have to kind of make that decision. I don't know what the best approach is. One might be a little better than the other. The 12 pips seems to work. It gives the trade a little more room. So for me, it just feels right, but that doesn't mean it is right. To target 2 and then set 1 pip. No, target 1 if it's 10 pips or more. But if it's 12 pips, that's when you start locking in. But you might want to lock in at 10 pips. Yeah, it depends on if you want to get a 10 pip target or a 12 pip target. Remember, a 10 pip target's only going to be 7 or 8 pips after spread. The way the calculator is set up like this, you may want to change it a little. So a couple things going on here. When you look at the second calculator, right, that marks your trailer, all the targets I have set to 1 with a minimum of 120. 120. And why is that 2.5, 120? Oh, that was an idea that John Lazar had. You could set it just like this because it'll end up being hidden behind the other target anyway. So the idea of this, see this dark green trade right here? It shows you where the 1x is. So when the price gets to that level, you don't take profit. That's when you start trailing. Okay? It just marks where the trailer. Look at the purple trade coming down. Maybe this is a better example because it already happened. You can see it. See this coming down? Here's the 1x. That's a money management level, but it doesn't lock in profit. In this case, it does. This is why I like the way this works. You're trying to get 25% off when you get to target 1. And it finally gets there down here. The only thing is it stops out at the trailer first. So it doesn't quite get there. You see, so what this does is it starts trailing at 1x if it's gone 12 pips. And it shows it to you with that little dot right there. Can you see that? So that's the first money management level. 1x trail. Now, sometimes it might trail and it's not locking in profit. Sometimes it might trail and instead it's only cutting the risk. Let me see if I can find you an example of what could happen. If I could find this, you'll see how it, I haven't looked at the euro yen in a while. So like in this case, well, this is trend mode. That's why it's a missed opportunity. Let's see that one. Okay, so let's just pretend that you're taking this gray trade. Okay? You're not in trend mode, you're in standard mode, for example, and it triggers in. In fact, let me put it in standard mode so you can see what I'm talking about. Just to illustrate what could happen. All right, so it triggers in, and it comes up and it hits target 1, maybe not on this bar, definitely on this bar, right? So notice that the stop now starts trailing. And see the stop is below the entry. You're not locking in profit. You're just cutting risk. Then when it comes up and hits target 1, it's still trailing. So the trailer now cuts risk by itself. But if it didn't, by the time it hit target 1, the stop would move up and lock in 1 tick because it hit target 1 and went 12 pips. But it's going to do whatever is greater, whatever locks in more. It's either going to lock in the 1 pip, but if the trailer is already trailing, it's going to go with that. You see? It's dynamic. They work together. And the idea, look, nothing's perfect. That target was, but the idea is you want to try to stay in the trade, give the trade the room it needs, while also protecting yourself and mitigating the risk that happens after each bar, right? So it's dynamically trying to dance with the market. You hear me say that a lot. That's what these settings are intending to do. To try to keep you in the trade, but to also mitigate risk. And realizing that nothing is perfect is also part of the equation. It's a big realization. You have to realize nothing's perfect, but it does a pretty darn good job. Now, maybe there's a little setting that might be more effective with one pair over another, one little adjustment here and there. The more you click through your charts, the more experience and time that you put into it, those things will come to you when it's just as you get better at what you do, right? So another part of the equation is allowing yourself the opportunity to just get better at it over time. There's no way to teach that. You teach that to yourself as you learn your market better, right? Always realizing there's no such thing as perfection. Every time you do something, there's a consequence. If you change something just to fix one trade, it could break like the next 10 trades. Who knows? So, be very careful when you start doing that sort of thing. But you will learn how the market trades the more you use the strategy. That's why the fast testing is important, and the back testing. Look at how different it was with trend mode versus standard mode, because it's a white trade. But hopefully you understand now what's going on with those two calculators and how that money management works. Let me know if you have any other questions about that. Here's a good example of the white trade that got filtered out. You see that? I have a 2-pip chaser, meaning it's going to adjust the entry up 2 pips. So when this comes up to here, it doesn't hit money management because it didn't go the 12 pips. Here's where the 12 pip setting really works, because it lets you grab the entry on the pullback, and then it goes up and hits target 1, target 2, target 3 perfectly, right? If you didn't have the 12 pip requirement, then this trade wouldn't have been able to, it wouldn't have worked. You would have hit the money management sooner. It would have stopped out with the trailer sooner. The trailer would have moved up, and it just would have been a missed opportunity. So it's like, yeah, sometimes it doesn't work. Nothing's perfect, as we know, but there's a great example in the most current trade on that 12 pip concept. Just in time. And that trade's still going. And oh, but that's a white trade that actually was able to catch up with the trend mode, which happens with the get in sync setups. All right, guys. Last call. Any more questions? Yeah, sure, John. So I recorded this also. I'm going to put this recording on the Owners Club in case anyone needs to review it. Yeah, good. You got it, Dexter. Sure thing, Lou. You guys another moment or two to collect your thoughts in case there's any questions you're just thinking of. Otherwise, yeah, Paul, definitely something that we've noticed for quite some time. You could create a trade plan that takes advantage of the later session. You know, you got the skills, you know how to do it, you know how to fast test, you know how to back test, and you want to take those ideas, and if you see something, you know, that's what makes a market, right? Everyone in here, yeah, there you go. Joey, I'm glad you like it. I mean, we love the trend jumper. It does what it does, and it does it well. It's kind of like that dart and dodge, quick jab to the nose. It's prone to get caught up in some noise sometimes, maybe because it's a single bar setup. It's really designed to just kind of quick jab. But counterpunch is a little more substantial, has some different principles working. You could use trend jumper with counterpunch if you know what to look for, because certain jump trades are just gold, right? If you know which ones, if you start really learning those ones that have the high percentage, but you don't have to. I mean, counterpunch by itself is, I love it too. I mean, we know it's not going to always be as easy as it was today, but when is trading ever easy all the time? It isn't. Never is. I'm glad you're enjoying it. All right, guys, have a great day. I'll see you back on Wednesday. Jot down your questions. Anything that we didn't get answered up, just bring it in on Wednesday and I'll answer them up for you. All right, Jason, sounds good. Bye, everyone.